Hey there, finance enthusiasts! Whether you're a seasoned investor or just starting to dip your toes into the world of stocks, you've picked a fascinating time to tune in. The global markets are buzzing with activity, and there's a lot to unpack today. Welcome back to another roller coaster ride through the ever-turbulent world of markets. Every day brings new twists and turns, and lately, the ride has been especially wild as investors try to make sense of shifting economic signals and policy changes. Today, we're diving into what happens when the Federal Reserve's rate cut buzz fizzles out. For weeks, the markets have been hanging on every word from the Fed, hoping for a sign that interest rates might finally come down and give stocks a boost. But as the excitement over a potential rate cut starts to fade, investors are left wondering what's next. The anticipation has been building for months, with every economic report and Fed statement scrutinized for clues. Imagine Jerome Powell, the Fed chair, dropping subtle hints about a possible rate cut. The financial world lights up with speculation, and investors everywhere start recalibrating their strategies, hoping to catch the next big rally. But now, reality set in, and markets are cooling off. The initial optimism has given way to a more cautious mood, as traders realize that a rate cut might not be as imminent as they hoped. Let's break it down and see what's really happening beneath the surface. We saw the S&P 500 and Dow Jones take a noticeable dip, reflecting the uncertainty and disappointment among investors. Meanwhile, the Nasdaq managed to hold its ground, showing a bit of resilience thanks to strong performances from some tech giants. It's a classic case of different sectors reacting in their own ways to the same news. Meanwhile, across the globe, Asia's markets are looking up. China's blue-chip stocks have surged to levels not seen since mid-2022, driven by renewed optimism about economic growth and government support. Investors in the region are feeling a bit more upbeat, at least for now. But over in Europe, the mood is a bit more cautious. Major indices in places like London, Frankfurt, and Paris have slipped, as investors weigh the risks of persistent inflation and sluggish economic growth. Why the sudden change in sentiment? Let's dig deeper. Inflation is still lurking in the background, refusing to go away quietly. Rising prices for everything from groceries to gas are making it harder for central banks to justify cutting rates. And to make matters more complicated, new U.S. tariffs on imported goods have added another layer of uncertainty, rattling both domestic and international markets. Plus, rising treasury yields are adding pressure. As yields climb, borrowing costs go up, which can slow down economic growth and make stocks less attractive compared to safer investments like bonds. It's a delicate balancing act, and right now, the scales are tipping toward caution. So despite all the buzz and speculation, the path forward is anything but clear. Investors are facing a fog of uncertainty with mixed signals coming from every direction. Some are holding tight, while others are looking for opportunities in the chaos. Now let's talk about what's next. The big question on everyone's mind is, will the Fed actually cut rates this year, or will they hold steady to fight inflation? The answer could have huge implications for stocks, bonds, and the broader economy. Right now, there's an 84% probability of a 25 basis point rate cut in September, according to market odds. But even with those high odds, investors are still on edge, knowing that a single data point or unexpected event could change everything in an instant. The next few weeks will be crucial. All eyes are on upcoming inflation data, which could either confirm the need for a rate cut or force the Fed to stay on the sidelines. At the same time, we're heading into a critical earnings season with major companies set to report their results. Everyone's watching for signs of strength or weakness in the economy, and key reports from companies like Nvidia could set the tone for the entire market. Strong earnings might boost confidence, while disappointing numbers could trigger another wave of selling. For investors, this is a time to stay alert and flexible. Strategies that worked last year might not work now, and it's more important than ever to keep an eye on the news and be ready to adapt. As always, staying informed is key. The more you know about what's happening in the markets, the better prepared you'll be to make smart decisions, whether you're buying, selling, or just holding on for the ride. So if you want to keep riding this market wave with us, don't forget to like, subscribe, and hit that bell icon for more updates. We'll be here to break down the latest news, explain what it means for your portfolio, and help you navigate whatever comes next. Thanks for tuning in, and I'll catch you in the next one. Until then, stay curious, stay informed, and keep investing wisely.